Hello traders, Nick Shaheen here looking at Shopify. I had a few requests, a few questions on it, so I thought a little video might help. I'm not in the stock, and Monday, September 9th, we had a pretty bad day for this type of stock. What type of stock? Momentum stock, software as a service, SaaS. So basically anything that's web based, the cloud that has been running like crazy, had a pretty bad day. But even with the bad day, they're still up folds and folds over. So they're still the champions, but they did have a bad day. So somebody asked, will it go down to 350 again tomorrow? It could, but if I'm worried about 350 on a stock, if I'm worried about $5 or $10 on a stock this fast, it's probably not the right stock for me to buy and hold, because I'll show you. All right, so let's talk on the short term. This is a 2-hour chart. Every candle is 120 minutes. You can see that it had a bad day, but it closed off the lows. So they asked, will it go back to 350? This is 350 where the cursor is now. So yes, and if it does, then it could go down to 320 if it loses that, because then it becomes like a mini head and shoulder. Well, not mini, a giant head and shoulders mini time frame. This shoulder, giant head, and that would trace out a shoulder. And if it loses it, in fact, okay, so mini lesson on head and shoulder pattern. It's a bearish pattern, but this is a technical statement on a short-term chart. So you can see some sort of a soon-to-come price, and if it loses the 350, how far down could it fall? Technicians would tell you it should fall as much as this. Okay, so eyeballing it down to here. While I don't disagree technically, I do think that there's some stopover points along the way, one of which is this one right here. This is the point of control. Basically, this is the most interesting line for the bulls and bears for this period of time. How long is that? So before July. So June on here. 3 months, let's say, ish. So it only makes sense that whoever fought over it in this mess right here, as soon as it comes down to here, if it comes down to here, they're going to fight over it again. Machines, right? They're going to fire off and then have another battle here. What does that mean? If it falls, it's going to slow down, and if it wants to go down lower, it has to go down that way. So yes, this could be the ultimate, but it has support. 350 is a round number. They'll love to fight over it. Look at this nice round number right here. What is that? Is it a round number? Yes. It's 340, I believe. I put mess over it. So yeah, 340. So why not fight over it here? Why not fight over it here? Is this a round number? Maybe. So there are spots to fight over before the eventuality here. And is this an eyeball target? Is this a good target? Sure is. They showed us that they wanted it at some point. So I've gotten as much as I can from this time frame. What is this time frame? 120 minutes. So the right thing to do is, again, this is Shopify. I don't remember if I mentioned that. I need to zoom out. Let's go to the daily. Why not? Whoa. Okay, so clearly this is 1 year worth of data. Every candle is 1 day. Clearly, the stock is still in the stratosphere. So this is even here, 156% off of that point here, which is January-ish eyeball. So based on the daily, the reins, like a horse, are still in the hands of the buyers. This reminds me of the old Boeing chart. Going to the moon, every dip is a buying opportunity. So if I eyeball this dip, it's a little more than this one, it's a little less than this one, and they all were buying opportunities. I'm not saying it's a good place to buy it. I'm saying if I'm long it for the long term, I'm still okay, but I should have trimmed or locked in some profits. Visually, I can tell you that this is a point of contention. This is 339. Again, it's not a hard line in the sand, but if I were to pick a hard line in the sand, that probably means something. Visually, also, this zone is pivotal. and something happened here that says, you know what, these earnings, we underestimated it. But I think there's also a headline after market or late in the day about them buying somebody for 450 million. Thank you, Jake, for that. But I don't know how that affects it fundamentally. I can tell you fundamentally, I can't imagine this is a cheap stock to own, so let's go check. Okay, so they still lose money and they sell about 40 times, their stock price is about 40 times their full year sales based on probably last year. So not cheap, okay, but they must be doing something great because everybody loves it. But everybody loved CMG until it fell out of bed. Everybody loved NVIDIA until it fell out of bed. So everybody loves it, doesn't mean they're going to continue loving it. And I'm concerned about the range. If it gets to 350-ish and it doesn't bounce, the pops will be selling opportunities, meaning what's going on here may not continue higher. I'm not calling that's the end of a rally. I'm just saying that, you know, how you buy dips and sell rips then becomes in the selling, the range turn into a selling opportunity. So the bears get a hold of it, but it's not so much bears to sell it down short all the way to zero, but to the pops are no longer buying opportunities. If I own it, it pops, I fix whatever is broken or profit from the short-term opportunity. That's my interpretation. It's not fact. Okay, so somebody asked and I'm giving my opinion. This is a 4-hour chart, so somewhere in between the two. Here, according to this chart, on this time frame, the selling reins, the reins are in the hands of the seller, so we've already passed that point. So in theory, I should sell the pops. So if I was worried about it, and if it pops $5 or $6 tomorrow or the day after, I should probably consider selling whatever was broken on Monday rather than hope that it continues on higher. Does that make sense? Until they recover 380. Tall order, yes, but this was a 380 is a moving target, so nothing is clear cut, especially on a stock that moves this much, but these are real levels. So here again, $332 is a point of control for this period of time. So you can see that there are a lot of lines, depends on which time frame I'm looking at. So the decisions I make have to fit my thesis. Why did I buy the stock? For the long term, then I should ignore this whole video. If it's shorter term, like 6 months or less, then these levels make sense. If it's overnight, then I should be making decisions based on this chart, 5-minute chart. And according to this 5-minute chart, there is information. All right, so this is 5 minutes. Again, this is for the fast traders or the fast decision-making process. So this dip, eyeball, half of it is this, which makes total sense of what happened here. Okay, so they say prior support becomes forward resistance. There's support that failed here. And is it resistance? That's the question mark. It was the first time around. So ideally the bulls can do this and then take it over. And then they fall back onto it to reuse it as support. That's the ideal scenario for the bulls. If you look at it, that's kind of a cup and handle there. Okay, so this is okay, good. 2 dinks on the 350. We've seen that on the higher time frame. So it's encouraging to see a quote double bottom, as long as they don't become, it doesn't become another neckline to where they fail completely and they do this and then go lower. You know, that would make sense. Same as the cup and handle makes sense. It all depends which neckline they take out first. So the immediate decision making process would be 360 plus is a reason to chase it a little bit. 350 minus is a reason to chase it the wrong way a little bit. But this action right here, and right here makes total sense. This is a half-back test where they fell this much, they recovered about half, and they failed, and that half actually matches this one, so it's all nice and neat. Does that make sense to everybody? So this is the short-term decision-making process on Shopify. By the way, this concept applies to any chart. It could be silver, gold, any time frame. Can we test that theory? Maybe we'll get lucky. I'll pop in a chart and we'll say, oh, look at this. Yeah, too messy. Ugh. How about the SPY? Yep, it works a little bit. Okay. I'm allergic to making short videos, apparently. I had a short video going, I ruined it. This is a dip about halfway visually. Is look at this. This is what 5-minute chart for the SPY. A move above it would tell me that the bulls have an opportunity to do this to eat into that other half. Meanwhile, this is a test. The half-back test of this dip was successful. They may fade and try it again, but if they lose this zone, then I may want to chase it lower upon losing that 297.8 or whatever. This looks like a solid floor, well, floor in quotation, kind of like that 350 mark on Shopify. Double bounce, 4 bounces here. But if it's lost, then they might finish this, whatever, ABC they call it, 3 pushes, whatever you want to call it, lower. Not calling for it lower, but I'm just telling you the interpretation exactly of that other situation with Shopify. So let me see here if I can, there's one concept. Okay, so this, is it R, right? Question mark, because this was support-ish, kind of the same concept. They lost it at X and they're trying to recover it, so they haven't failed. Well, they failed here, but they're still trying again with their second push. Is it our resistance forward? If not, then I'm optimistic for the market, but we have Draghi coming up. So Nick signing out. This is way too much information above and beyond Shopify, but it was one concept that I carried through two tickers.